Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's September 4th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I almost had to postpone this podcast. You guys know that I like keeping my schedule for this podcast for many, many years. I always try to get you something every single week. But it was almost postponed because of Hurricane Dorian. I expect to hit late Monday, the landfall. I'm located in northern Florida, so there was a lot of concerns. I mean, this was a Category 5 storm, winds up to 185 miles per hour, guys. I put that in perspective, the last 30 years, we only had one hurricane that's really comparable, and that's Hurricane Andrew. That was in 1992. And that was also a Category 5, but winds were 175 mile per hour, less storm surges that were expected. So again, Dorian is 185 mile per hour. So you're looking at Andrew, over 60,000 homes destroyed, 124,000 damage in South Florida off the Gulf Coast. That added to over $26 billion in damages. Now, I know a lot of you who are not located in Florida, they're watching the Weather Channel and the media and saying, Frank, these guys, are you going to be okay? I've gotten so many emails, because they intentionally make you very, very worried. So even some of the stories that I've seen, like outside of Florida, just on local news places, and the stories, they're kind of hilarious. You just have to laugh. But Florida, and we had mandatory evacuations just about every town along the coastline area, including us. Because if this hurricane hit us as a Category 5, which was the forecast for many models as late as Sunday, it would have destroyed everything, guys, everything in its path. I mean, it would have been a disaster. So we really got lucky. As of now, right, it could still shift, but I don't think it is. It is shifting to the north, and we're good. I'm doing this on Tuesday, right, because Wednesday, even though it's not supposed to hit us that hard, we're outside the cone now, which we weren't. We were inside that cone. It was only 40 miles off that eye, which means we would have seen damage. It was pretty crazy. Now it's about 120 miles, even more. It's supposed to be off of our coastline. But we did get lucky, and we're still going to have 35 mile per hour winds, probably 40 mile per hour winds. So we're probably going to be out of electricity for a day or two, which is normal here. That's why I want to do the podcast on Tuesday. But, yeah, we've got lucky as of now. So thanks for all the prayers. And again, taping this on Tuesday since we're probably going to lose power, at least over the next 24 hours if I had to guess. But that's much, much better than the 120 mile per hour plus winds. I mean, that's what they were forecasting for in my area. And again, just a few days ago. So it's when you look at the storm in general, guys, I mean, we got very lucky because the storm did something nobody predicted or the models predicted. And that's slow to a crawl over Bermuda. I've never seen this before. I don't think anyone's seen this ever in any hurricane. It was moving at 1 mile per hour. So you could walk faster than it. And it moved at that pace for 36 hours. Now, why was that such a big deal? Because we had a big front coming down from the northwest, and that front was supposed to hit Tuesday, maybe Wednesday, and we didn't know if it was going to get down here quick enough because that front pushes it to the north. And the fact that it just stayed in Bermuda for so long, that front kept coming down, and now it pushed it to the north. So we got very, very lucky. I mean, Bermuda didn't get lucky because the hurricane just stayed as a Category 5 and just stayed in the same spot for pretty much over 24 hours, close to 36 hours. And now it's coming up the coast now. But thank God for the front. And now it's pushing out towards the Atlantic, pushing the winds towards the east, which is really good, northeast. So really crazy because everybody's making preparations. You've seen everybody boarding up everything. We gassed up our cars, generator, cleaned all loose things around the house. Again, make sure the generator's working. Bought about, I would say $300-400 in supplies. Fans, lights, extension cords for the generator. And the fans and lights are for, when the electricity does go down, because during Matthew, which is the last major storm that hit, it was a week we were down. It was a full week we had no electricity. Think about that. So if you don't have a generator, the refrigerator, you don't have air conditioning, it's very hot in Florida. So you want to make sure you have fans. We happen to buy a generator. We need a generator, so it's not hooked up to the house where it's, the AC comes on and everything, but we could plug it into our refrigerator, to a TV, whatever, to weather the storm. But, all the stores are really crowded, pretty crazy. It's interesting because now it's not going to hit as hard. I can see a lot of stuff getting returned. But I've been here for 10 years now in Florida, so I understand hurricanes a lot, just like any Floridian. I'm not calling myself Floridian. I'm just saying. But this really did have disaster written all over it. I know a lot of people outside saying, "Oh, you worried us. It wasn't a big deal." I mean, we would have saw hundreds of thousands of homes destroyed if this thing would hit its head on as a Category 5. Probably north of 30 billion in damages, maybe more like 50 billion plus. So, thank God that this thing turned, which is really good. So I was just going to do an intro with no interview since I really expect my power to be out most of the week. This hurricane was expected to hit Sunday night. Okay, I'm doing this Tuesday. It's not hitting to tomorrow afternoon. And it's not going to be a hurricane, more like a tropical storm. Again, thank God for that. But I really put this thing together within a half an hour to get a great interview and to get a full podcast in, because that's what I do for you, which is really cool. And I have some amazing guests. One of those is my buddy Marin Katusa, who's a founder and president of Katusa Research, who I called on 15 minutes notice, and he said, "Yep, I'll come on right now," which is awesome. But if you don't know Marin, he's one of the smartest deal makers, financiers in the resource sector, one of the hottest sectors in the world right now, right? I think gold and silver really take off. And he's also someone who tells it like it is. So be sure to listen to this interview until the end, because the last part is really, really cool when Marin discusses how important it is to follow people who have skin in the game, put their own money in these deals, people who go out and do the boots on the ground. Listen to that part, because he is going to tell it how it is, and it is going to be entertaining, and it's going to be right, especially when you hear it's going to be really cool. But he always tells it like it is, no matter who he offends. And that's not all that we're going to talk about. The boots on the ground, how important it is for the research process. But we're going to talk about, obviously, gold trading at a 6-year high. Is the down cycle officially over? If so, what are Marin's thoughts on this? What are we going to do? And it's going to be interesting because he's forecasting something to happen with gold that never, ever happens in relation to this other. Well, I don't want to give too much away, but just you're going to hear something that you never heard before. And I kind of agree with him. I think he's right on this. But in order for gold to move higher, this has to happen. And usually when this happens, gold moves lower. So he's forecasting something that never came true. Again, it's going to be a fantastic interview. He's also going to talk about a recent trip he took, South Africa. Could be a little vague on it because he's writing to his subscribers about it. But it is an amazing trip, something I was supposed to go on. I just couldn't for personal reasons. I couldn't get there. I like to take a lot of trips. We do a lot of field visits. I do a lot of field trips with Marin. So it's going to be great because he could break it down, tell you a lot about the project, what he's doing, how he's investing in it. But again, it's not going to give away too much because that's for his paid subscribers. But really, really great interview coming up. And you know what? Let's get to it right now. Marin Katusa, thanks so much for coming back on the podcast.
It's my pleasure, buddy.
Well, let's give a little background here because there is like a hurricane supposed to hit us, and now it's veering off a little bit more. So we're going to probably lose electricity for the next couple of days. But I was going to do a simple podcast just saying, hey, guys, I'll be back next week and just doing a little update of the markets. And then when the hurricane started pushing away, I said, let me see if I can get one in on Tuesday, which we're doing this now. And how long ago did I call you?
15 minutes ago.
Marin's like, sure, I'm
on the busiest day of my month.
They say if you want to get something done, you always go to the busiest person. That's what they say. So that's why I called you. But yeah, in all honesty,
or am I a BPN? Or am I your BPN? Better than nothing.
No, you were actually my first.
Put me
call.
in, coach. Put me in
first. No,
on your number one
no.
string backup.
It's like the guy that you invite to you have one ticket left and you call like 80 people and there's one guy you're like, all right, let's just call him. He'll definitely go.
Now I know where I stand with you, Frank. Thanks, buddy.
Listen, in all seriousness, guys, Marin did come on this thing in about less than a half an hour, and he was my first call because I know he always has my back and stuff. So I wanted to get a good interview out, and there's a reason why I asked Marin to be on this call today. A few things. Gold is surging, which we'll get to. Also, he took a really cool trip that I really wanted to go on, and I couldn't because of a couple personal things I'm dealing with right now. And so much to talk about. Now, let's start with this. Because you post on Twitter a lot, and you actually had a poll where you said, you asked your audience and your file, the people who follow you, you said, is the gold bull market underway? And you had about 300 votes. And yes, you're a resource guy. Most people follow for resources. But 80% of the people out of those 300 said yes. Does this worry you? Could this be sustained? Where is gold going from here?
So let's bring it back a bit, right? So the polls, you got to take that with a grain of salt because it's like going to the Vatican with a bunch of Catholics and saying is do you believe in the Pope? Well, of course they do. It's you're talking about a select polling. So do I take it with a grain of salt? I take, after 17 years in this business, you get kind of beat up enough that you kind of take, I've seen everything, and yet I expect the unexpected. So I'll tell you where I'm at personally. And I've been saying the same thing for a few years now. I think I was one of the first guys to say 2 years ago, we're going to enter a market where both the U.S. dollar and gold are going to rise. And I remember Rick Rule and Doug going, well, that's metaphysically impossible, and Doug going, wow, how can that be? It's just like, well, let me walk you through where the world's going. With NERP, this is as important. Negative interest rate policy is the defining thing of our careers when it comes to the macro global play, Frank. And I don't think the markets understand this enough because they're feeding it through the mass population, saying, well, your mortgage is going to be less, your interest rates are going to be less, so you're going to have more money, but that's actually not true. By definition, negative interest rates there's two things you can guarantee from. Things are going to be worse in the future. And number two, it's deflationary. Because if you actually just work through the numbers, if you give me $1 million and in 10 years I'm going to give you $950,000 back, there's less money in the system. And when there's less money chasing the same number of goods, that's deflationary. Okay. Deflationary is very bad for a lot of things, like base metals. If you look at like copper, that's where, and it's telling that the global, and then lay that over with the trade war, or you can define it as the currency wars, what's going on with China. So, could the peg go from, over 7 to 1 to 8, 9? Why not? Right? Because this is a tool that the Chinese can use. This has happened in the past. If you're kind of like, I'm kind of a little bit of a resource and gold and currency nerd. This is what I enjoy. It's my passion. This is not the first time this has happened globally. So when you look at everything in the global currency standpoint is a relative game, right? So you look at the Canadian dollar. Well, it's relative to the U.S. dollar. And the Canadian economy, I'm going to take, me, Frank, you've known me for a long time. I'm like the absolute contrarian core guy. Canada has become such a, politically correct green haven that they forgot to remember what built the strength of this nation. It was resources and hard work, immigrants and hard work. That's what Canada was based on. Immigrants who are willing to work hard and exploit in a proper way the resources of the nation, the riches of the land. Well, the Greens are going to realize in the next few years how bad it's going to get, because I think oil is going to be under pressure. The oil patch in Canada hasn't been able to build their pipelines, so they're trading at a big discount to the U.S. and international oil markets. And you're going to look at base metals are going to have a tough go. And that revenue, if you look at the resources in Canada, it's a resource nation, and our currency is now going to be worth much less relative to the U.S. dollar. Our debts are getting to all-time highs. There's been no prudence or fiscal management. And then you start seeing that this pattern isn't just Canada. You could say the same thing for Australia. You can look at many of these places. Look what's going on in South Africa. I was just there a couple of days ago. Just see the riots going on. These are, when your currency starts getting devalued, when you're importing things, that becomes a big, big problem when you're not producing anything of value. So that's kind of where I see negative interest rates are the ultimate FTD. Now, Frank, you started laughing when I talked to you about my FTD theory a few months ago, but it's the ultimate financially transmitted disease, an FTD. I coined that phrase. I created it to really kind of bring it in a fun way to people to explain what happens with an FTD. Negative interest rates are going to go viral, and they're going to stay around for a long, long time, and there's no antibody or vaccine for it. And what's going to happen is negative interest rates are going to go a lot lower than most people expect, and they're going to stick around, unfortunately, like an FTD for much longer than people want in their portfolio. So how do you position yourself to this? Well, a few things. U.S. dollar is going to stay strong relative to the other currencies because the rest of the world is in a shortage of U.S. dollars. And I know that sounds crazy, especially for all the gold bugs who are having a hard time. But I always use the example when I walked Doug Casey through this example. I first shared it with him about a year ago. I said, Doug, I manage your money. We've done really well. Just stick with me on this, but I'm going to areas where we've gone from linear mathematics to quantum mechanics. And in linear math, you can't take a negative square root. Well, you can if you introduce something called an imaginary variable, and that's the I. It's not interest, it's an imaginary variable. And you start doing quantum mechanics, and that is where we are in the global macro perspective. And this imaginary variables, negative interest rates, are changing everything. And gold and silver are going to be a net beneficiary because of the negative trade on, the negative carrying costs of gold are no longer there. Now, why are people willing to take a negative interest rate? Sounds kind of crazy, right, Frank? Hey, Frank, lend me $1 million, and in 5 years I'll pay you negative 2%. It goes against the common sense, right?
Mm-hmm.
But that's actually not how it really goes. If you're a massive pension fund, you're willing to take that fixed cost less because it's a guaranteed stream of cash in a world. Think of it as paying insurance on your cash. And you can't just, if you're this big pension fund, you can't just put that cash in a vault because that's not how the balance sheets work. So, the first thing I would say is, why the hell would I sit there with a negative, 2% yield or whatever is going to happen? Well, because the bonds that they're buying, they trade, and the price of the bond goes up as the yield goes negative. So it's finding that equilibrium. That's number one. Number two, you're looking at in a global way what's going on in Germany. What do you think is going to happen to the pound when they actually finally do Brexit? Well, first of all, they're going to want to devalue their currency. But then what do you think the EU is going to do? They're going to slap on tariffs. So this is going to be, right now, everyone thinks that the U.S. and China are in this trade war, but there's unintended consequences that the derivative effect or the domino effect of other countries slapping on tariffs on each other. And it's just, it just turns into a massive currency war, essentially. So where I'm at right now is, do I think this gold run is real? Yes. It's the second largest holding in my portfolio after U.S. dollars. And people go, what the hell is he doing with U.S. dollars?
You've had U.S. dollars for a while, Marin, though, right? I mean, explain that too, which is a good point. You've been saying that for a long time, at least for the last 3-4 years.
Yeah, and it's been a fantastic place to be. And if I wasn't able to have that cash, it's my gunpowder, it's my strength, because if I look to the Canadian dollar, when I first came out with this, people thought I was nuts. I bought out one of my partners in the fund because they're like, gold is US. I go, I know, but we're in this deflationary age. There's still downside risk on gold. When end of 2014, when I went heavy US dollars, we almost had very little gold. And then I switched, as we're seeing this now, and you use US dollar, a stronger currency, to buy these assets. Now, I'm one of the largest financiers and investors in the junior golds and silver and uranium, but without US dollar, you're shit out of luck. You can't buy them, right? And your Canadian dollar is going to be worth less and less because these costs at the mine, like you've been to mines with me, do you think that the trucks and the steel and all that, it trades in US dollars, right? So you want to be producing in areas like, say, Brazil, producing gold right now in Brazil, after you've built your mine, which are fixed U.S. costs. Now your operating expense, about 2/3 are the local currency, and then 1/3 is still U.S. dollars. Like, you still always need tires and steel and all those costs. But the real is significantly undervalued to the U.S. dollar. So gold right now is at an all-time high in the Brazilian currency. Same thing with the Canadian currency and the Australian currency. So, a year ago when I said $2,000 gold, here we come, and I said, if you read it, we're going to hit that in Australian and U.S. dollars. We're at over 2,200, 2,300 in Australian dollars now. And unfortunately, the currencies are going to go lower because of the negative interest rate policy that is happening. So it's this negative spiral. The IMF, Lagarde, she's come out and said, this is our policy. And right now, the commentary in the market is this is like a short-term fix. It's just going to be an injection of adrenaline for, a near-term catalyst, like a rush to the economy. I call bullshit on that. And if you're an Italian, what's the difference between negative 0.4 minus or negative 0.6? It ain't changing anything to the Italian economy. We're going to see negative 2, negative 2.5, negative 3, and people are calling me crazy for this, but these things currencies and interest rates, they move like a massive freighter. It's not a speedboat that, the junior, like the mining stocks are a speedboat. They can turn around and accelerate quickly. But currencies and these bonds, they're like massive freighters. They take a long time to work through its system. And I see over the next 5 years getting to -2%, -3% yields.
Now, you said a lot of interesting
very
things.
Bullish for gold.
Yeah, and you said a lot of interesting things there because, we do know a lot of gold bugs are out in full force, and you talk about deflationary, and then we have guys like Peter Schiff, whatever you want to get into, but he'll talk about inflationary forever, why that's bullish for gold. But I hear this from so many gold bugs where you got to buy gold for, like you said, negative real interest rates. It could be you could buy gold for a safe haven, especially with everything going on in the world, where we're seeing 17 trillion in negative yielding bonds right now. Buy gold as an alternative currency. But when I see your reasoning behind this, where you're saying we're going to have negative real interest rates, we did have record low interest rates from 2012 to 2016, where we saw gold prices fall 25%. And when the shit hits the fan in America or globally, people basically flock to the dollar as a safe haven, right? Not gold. That's a fact. When you're looking at, what trend is going to drive this higher, because you recently said Rick ruled Casey when you told him, hey, gold and the dollar are moving higher in sync, and they were saying, were did you metaphysically impossible, and it's not going to happen. But one constant trend we have seen, because what you're calling for is something that we normally don't see, is the dollar and gold moving in the same direction. Because if you notice, gold has been going up, surging, right, to 6-year highs, as the dollar has been weakening. So what makes you think that trend's going to change? And we've seen trends change all the time, but get a little bit more into that, because that's going right in the face of a trend that's been around pretty much before the credit crisis that we've seen, where it moves opposite direction of the dollar when it comes to gold prices.
So in the gold markets, you've got different gold markets. So you have, like, let's say, the paper gold market, like the ETFs in gold. That's one aspect that makes it easy to own gold, but yet there's cost to that, right? There's a negative carry, what they call, because it doesn't produce anything. So like Warren Buffett always said, you can rub it and touch it and feel good about it, but it ain't doing anything for you, because he never believed in the store of value of it that gold is held. But if you're in Turkey or Venezuela or Argentina or Russia or Kazakhstan, any of these places, Canada, that store of value is huge, because let's take in 2011 when the Canadian dollar or Australian dollar was par with the US dollar. Well, we've been depreciated between 35 and 40% relative to the US dollar, but if you held it in gold, it's a hedge, right? Then there's the physical gold, which I tell people to be very careful about. Don't show it off. Don't store it at home. Make sure you're very smart where you're holding it. But there's a cost to that also. Against the negative carry, doesn't produce anything. But if you have it at the bank, be careful where, what happens if there is, in certain countries when they shut down the bank. Be very careful, because if there's a run on a bank in Turkey or Moscow, or what happened to Cyprus banks and they just shut down, when they shut down the bank, they don't let you into the bank vaults either. Your bank vaults get seized too. So be careful where you're storing your gold. So that's another additional issue. There are interesting ways that you can, have access to your gold at Brink facilities. So make sure you do your due diligence in silver if you're holding the physical. But the biggest bang for your buck, Frank, is investing in these equities, because it's almost like a return on gold in steroids. And you're looking at some of these guys, like look at what the performance of my first write-up when we first went, when I published Katusa Research first ever report, when I bought just under 10% of Newmarket, and I based it all off of Fosterville. I said, look, first of all, they're bringing in new technology on this proven asset. It's built. I always felt it was mismanaged with the previous two management teams. And you have the advantage of the currency factor. The mine's built, and that stock went from $1 to almost $60 in 4 years. And that's not a penny stock. It sounds like, well, it's $1, it's a penny stock. No, this project's had hundreds of millions of dollars invested in it. And, Eric Sprott made $2 billion from that bet in 4 years. So that's the other way of playing the gold market. So now you're looking at the bond market, which is way bigger than the stock market. This is the problem. Most newsletters, most newspapers, it's easier to explain stock market because it's exciting. You've got a guy like Elon Musk or Steve Jobs, Warren Buffett, they always talk about stocks. And everyone, like, when's the last time you went to a house party and people are talking about, oh yeah, man, I just bought these bonds. Like, most people talk about stocks, right? It's a fact, right? But yet the bond market is multiple times larger than the whole stock market. And that's the big issue here, Frank. Where is this money going to be going? And you look at the dilemma of pension funds, sovereign wealth funds, the union funds, educate, like all these factors, and people are going, whoa, this is a new normal that we're entering. And you know, you go through the CFA program, they don't talk about these negative interest rates. This is happening in real time. This is an experiment that they're applying. And, you know, even Janet Yellen, the former Fed chair, she's not acknowledging this inverted yield curve. She's saying, well, there's a reason for it, structural and blah, blah, blah. And the market's saying, I'm going to really buy that, right? So you got to, yes, there's the old saying, don't fight the Fed, but what do you really think is going to happen with the U.S. when the rest of the world is dropping their interest rates? What choice does Powell have? Trump knows this, okay? And I know people bash Trump for their political reasons, but he's taken on this Fed because whether Powell wants to or not, he has to cut rates, okay? Because, again, yields and currencies are a relative game. And with the FTD, the financially transmitted disease of negative interest rates, spreading virally around the world, China's going to do what's best for China, not what's best for the Americans. And they're going to keep dropping their currency. Okay. Now, what do you think Hong Kong's really about? Well, you've been to Vancouver, you've been to my house, you've been to my neighborhood. I'm the only Canadian in my neighborhood. It's all foreign money from China because that capital's been flowing out. Now, nobody wants to talk about it in Vancouver because it's almost like racist to talk about it. But what kind of neighborhood has no people living in their house, and these are all 10, 20, $30 million homes? Well, the Chinese government isn't stupid. They're clamping it down, and that money was fleeing out of Hong Kong from mainland to Hong Kong, and they want that cash to stay. Believe it or not, Frank, China has a shortage of U.S. dollars. Everyone keeps talking, so many of these guys who are anti-U.S. dollars, believe it or not. Why then would the Chinese currency be devaluing and the U.S. dollar appreciating relative to their currency? There's a shortage of U.S. dollars globally. Throw in my book, I talked about the petrodollar and what's going to happen with the reversal of petrodollar as they produce more oil. We're seeing a reversal of the petrodollar, or the unwind of the petrodollar, and that means there's a shortage globally right now for multiple reasons of U.S. dollars, and that also flows to support the U.S. dollar and also gold and silver in a minor way, because the silver market is so small, it's going to be its action is going to be super viral on the upside, very, very explosive. But also when it's time, when this eventually all blows up, silver will go down much more than gold too, because it's much more. I always use the saying, gold is the currency of kings, silver is the currency of gentlemen. But these gentlemen are on steroids and they're very emotional, let's call it. And then I always say the uranium guys are silver bugs on steroids, right? So they're like crackheads, you know, with their emotion.
You know, I know you for 10 years, and, you know, you're a pretty smart guy. That was great. I love the way you put that. No, seriously, I didn't realize how smart you are till right now. I was going to bust your chops.
That's because you're usually drunk around me.
So you know what? It was great. I just let you talk, and I love the reason behind. By the way, you know, I love your thesis. I just wanted to say that because, you know, people who are buying gold that believe that it's a play, you know, where the dollar's going to go a lot lower. I just can't see the dollar crashing. I mean, you just brought up so many different reasons, but you know, America is not like doing great by any standards, but compared to almost every other developed emerging market, our economy is amazing right now, especially considering what you brought up, right? We have an administration that's going to do anything it's power to prop the economy. He can call out the Fed, and the Fed has to lower it. I love how you put that. They have to. If you're looking at where corporate bonds are, if you're looking at where everyone else is devaluing their currency, we have to. It doesn't matter, if the economy's, we are going to lower rates and are going to go a lot lower, which, you know, all reasons why the dollar should strengthen here. It could be wrong, but, you know, anyone calling for, you know, the dollar to go a lot lower and gold to go a lot higher, I like the fact that you're saying, hey, both of them are going to go higher. Now, here's a question. What's the best way to play this? Because in past bull markets, even when we saw a little one, right, the end of 2015 into, you know, like middle third quarter 2016, the junior miners usually outperform. And that's like that in every single industry, guys. Whenever you see a whole industry move higher, it's the most risky stocks that move, much, much higher. And they also go a lot lower when the market crashes. But we're not really seeing that this time, where we're seeing the producers do well. They're going higher. Obviously, they're going to benefit directly from the higher cost of gold, right? Because they're producing. The royalty companies are on fire right now. But how come we haven't really seen that much out of the junior miners? And maybe they diluted the hell out of them. Remember, we're going through a market where, since 2012, for the most part, outside that little period, 2016, it's been horrible. But how come we're not seeing more of the junior miners really appreciate as gold is appreciating here?
So you get my stuff and you see it, but here's the answer. They have. Like, we've had one of our stocks triple, another one. These are junior non-producing gold stocks. Another one's over a double. The problem with the junior mining is so many of these management teams expect to experience the gains that the good guys or the quality management teams, because they have gold or they're looking for gold and they're in the sector. Think of it as funds as flowing water. At the top of the multiple fountains. The top is, look what happened with Newmarket and Kirkland Lake when they merged. It went from $2 to $60. Well, Fosterville was a monster. You look at B2 Gold, which we wrote up, and it's almost a double, but it's a big cap. It was, you could have bought it all day long at $2. Now at $4.80, everybody's talking about it. Equinox, another story. I'm one of the largest shareholders. And everyone's like, Marin, your stock's not moving. Well, look what's going on now. They're producing at 2 mines. They're going to put a third mine at. Now it's kicking ass. You got some of the best management team. They are doing well, but you see, this is just starting. We're in the early days, and I think the rules have changed where, I don't need. Okay, so for example, what you want to avoid. If I'm right on my thesis, which I'm betting very big, the size of my fund and my personal net worth, and I'm betting big here, that I'm right on this negative interest rate policy. You don't want to be borrowing in U.S. dollars, okay, when your income is in a devaluing currency, because your debt just got way, way, way more expensive. And that is the crux of this situation. So you got to be super selective now. Now, if you think the U.S. dollar is going to go down, you're going to take the opposite trade of me, meaning that the U.S. dollar is going to devalue, and the Australian dollar, and the South African rand, and the Turkish lira, and the the Russian ruble, that they're going to strengthen. Well, then load up on debt in the U.S. dollars because you're going to be paying it in your local currency. Well, that's not working. We see it. So there's a shortage of U.S. dollars. It's crippling these environments, right? So that's what you want to avoid. That's what I'm avoiding. And I'm looking at producing assets. So now you look at your costs are now, let's use the example of Equinox, right? They're getting all-time highs in their revenue because of the price of gold. In their cost base is decreasing, right? Because relative to the U.S. dollar. That's what you want to be doing, the Canadian assets that are producing. But if you're going to have to go build that now, it's like a catch-22. It's going to get super expensive to build things because they're in U.S. dollars. So, and the time delays to permit and the whole NGOs and the environmental movement, it's getting harder than ever to build something. I'll tell you stories about where, just 5 or 6 years ago would take 3 months to amend a permit, are now 3, 4, 5 years, and it's crippling the production of these companies. So I think the big funds, because of this passive fund movement, I guess the answer to your question essentially, never before has so much money been managed by passive funds, meaning the opposite of guys like me. Their algorithms are just management teams. They want liquidity. The passive management is continuing to grow because the millennials, and you just look across the board, people just don't want to do the hard work, right? There's the people listening to your podcast, Frank, are like the 1% of society who are willing to put in their hours. They're the guys willing to educate themselves and prepare and do the hard work. Most people aren't. They just want to know what Kim Kardashian's doing and what's going on with the football and blah, blah, blah. They'll rather let someone else manage it. And the passive funds would rather play the big liquid majors, and that's why we've seen the majors outperform most of the juniors. But if you've bet right on the right juniors, they are outperforming the big caps right now. And we are in a bull market, just not across the board, But if you know what you're doing, you're pulling off doubles and triples right now.
So let's turn the page here, because another sector that you follow, Marin, is uranium. And we saw Section 232. That was a memorandum that could have mandated, I believe it was up to 25% of uranium in America be produced by U.S.-based uranium companies. That was shot down, and you saw the U.S.-based producers come down a lot, much more than I thought that they would come down. To be honest with you, I gave this maybe a 25% chance of passing. I guess it was much higher than that, but that was just me because, again, a lot of the legalities behind it and showing that it's a threat to our national security. I just didn't know if that was a little difficult to prove right now. Plus, it's a big step when, we have a president election next year, which, you don't want to rock the boat in any crazy issues here, but what do you think about uranium now, where we're seeing prices wherever $25, $26, which is insane? I mean, yes, they did break below 20 a little bit higher, but we're talking about, well over 100 pre-Fukushima, probably 55, 60 to produce. And a lot of the global guys did good when Section 232 came out, the ruling came out. What are your thoughts here? Is this an opportunity to purchase some of the American producers? Do you see uranium prices going higher here? Because there's still, a double from here, and they still can't make money, right? Some of these guys.
Again, I get more slack or, negative feedback from the talking heads or I call them online trolls because of uranium than every other sector combined, and because they're being very localized. So let's think about it. And my tune has not changed for 3 years, and it's why I'm the founder and largest investor in Uranium Royalty Corp, which you yourself are. My whole thesis back 3 years ago was, guys, we, the North American public markets, aren't understanding or appreciating the position that the Kazakhs and Russians are in. I have a whole chapter in my book about it. I don't know how much more clear I could write about it. And the irony of all this was, I call it the cut-to-kill strategy of the former Soviet Union bloc. Let's take what we just talked about, gold. They're doing the exact same thing, but you see, go to Kazakhstan. When I first went there, 16, 17 years ago, it was all about what they're going to do. I think they were producing 1 million pounds at the time, no more than 1.5 million pounds. And they brought in foreign capital from Japan, Korea, Canada, the U.S., everywhere, France through Areva. And they used other people's money to build up these assets, incredible assets. But, it is what it is. They use other people's money. They pushed the permitting. They didn't have the delays that, you would have in Canada or Australia or anywhere else in the world. And they went from, within 15 years, from 1 million pounds to over 60 million pounds of production. We're talking over 50-fold. Name me another commodity that one country has gone 50-fold within 2 decades, Frank. Name me one. Right?
Yeah. Mm-hmm.
Number two, they used other people's debt. So this cut-to-kill strategy is fundamentally this. Frank, I'm coming to the Bronx, and we're going to do this project, and I'm going to bring my money to your neighborhood. And so you've got the asset, you got the neighborhood, you got your crew there, and I'm going to bring my money. And after a while, I'm getting my money back. And you're like, hey, Marin, you know what, man? Things are changing in the Bronx. I got to cover this guy, and I got to do this. So I know you were 60%, and I was 40. Frank Curzio was 40%. We're now going to go 50-50. And I go, fuck. I'm not there. These are all Frank's crew. He's operating. I don't really have a choice, do I? Right? So we go for another year or two, and guess what? Frank now comes back to MK, and he goes, hey, man, you've gotten a decent return, relatively speaking, to the other market. My costs are going up, so, your ownership's going to be 40% now, and I need 60%. Well, what choice do I have, Frank? Now, this is a cut-to-kill strategy. That's exactly what's going on in Kazakhstan. Look at, for example, Cameco, which is the second largest producer, or third largest producer of uranium in the world now, because they're actually more of a trading house than they are a producer. But anyways, Areva is the second largest. They were 60%. They have a great asset in Kazakhstan called Inkai. It was 40% Kazatomprom, 60% Cameco. Well, today it's transitioned to 40% Cameco, 60% Kazatomprom. Now, do you think the trend is your friend, or do you think the Canadians who come, once every 4 or 5 months, trolley up into Astana, which is the capital, do you think it's going to continue, or do you think they're going to, hey, you Canadians are having a tough time with the price of uranium? Okay, we'll give you 10% more. Which way do you think it's going to be?
Yeah, go ahead.
Secondly, that's across the board. Now, you're playing their background with their rules. Thirdly, they have this tenge, the currency, that is devalued. So they're making the same margins today at $40 uranium as they are at $26 uranium. So it's irrelevant. More importantly, if I was the Kazakhs, and first of all, I want to make something very clear here. These guys are smarter and better and know what's going on in the market, the Russians and Kazakhs, from their production standpoint, than anybody in the U.S. market on the production. And one of my best friends, you know how close I am with Amir, okay? The guy's at my wedding anniversary. It's him sitting with me and his wife and my wife. I will go to war for that guy. He's an incredible guy, as you would. But here's the fact. The Kazakhs produce over 40% of the world's primary uranium production. That's like taking all of OPEC and Russia under one management team. Now you tell me, if one company produced 40% of oil in the world, that'd be kind of like Rockefeller going back in the Standard Oil days. You don't think he would know more what's going on in the global oil market than some little small company looking for uranium in Africa or something? Of course they do. These are smart, educated, well-financed, and well-situated individuals. And like, I've sat with the management teams. These guys are sharp. Do not underestimate them because they're in Astana and not in New York. Okay? That's the other thing. So you have what I see happening now, and what I expect them to do in this cut-to-kill strategy is they're going to keep leading the market. And they're going to go to Cameco and say, hey, Cameco, you're buying uranium off of us and then just fulfilling your contracts using your long-term prices. Why are you doing that when I could do that? You're eating my lunch. So there's going to be compression on the Western front on this trading because the Kazakhs are taking market share. And they're going to start doing horse trading, going, well, maybe we want to own part of McLean Lake or Cigar Lake, or we want to have a bigger ownership in Inkai, the joint venture that I mentioned earlier. So these are the type of factors that we're still flushing out in the global uranium sector. And guess what? If you study the oil markets, which, when I wrote this book, I became obsessed with understanding all these factors. It is no different than what happened in the oil markets in the late 1800s and the early 1900s. So this cut-to-kill strategy, I believe, is what's happening. And I think the best way to play it is streams and royalties. And I just sat with the president and CEO of one of the world's largest streaming companies, and he just said, Marin, wow, do you make a compelling argument? And he's investing in it. So what I'm trying to get at here is you want to buy royalties and streams when there's no competition, when nobody wants it. That's what Franco-Nevada and Silver Wheaton did 15 years ago. Their best streams, their biggest cash flowing generators weren't when gold was $1,500. It was when it was $400. That's where we are in uranium. And then, of course, the Kazakhs are going to, once they consolidate the sector and they get exactly what they want, and these are smart people, then watch the price of uranium run. But like I've said for the last few years, it ain't going to be for a couple more years. So play the uranium sector through Uranium Royalty Corp. That's how I'm doing it.
And when can they play that, right? Because that's supposed to go. I don't know if you're allowed to discuss that or not, but it's a private company right now. It's planning on an IPO pretty soon, right? I guess so for individuals to actually buy that.
Yeah.
Okay.
I believe it's going to be before year end. Now, look, things can always change, but that's what I expect. And then my subscribers got in at the same time at the same price as myself. So that's another benefit service that I do in our newsletter. So that's how I'm playing it, and I think it's the best way to play it.
All right. Speaking of your newsletter, you just took a trip, and I've taken a lot of these trips with you. Again, I had a couple personal things I'm dealing with, so I couldn't really commit to it. I wish I did. You are writing about this in your newsletter, right? So that's going to get published on Wednesday. It's probably going to get published after your newsletter, this podcast. I don't want you to give too much away because those are the people that pay for your research, but it was a pretty amazing trip, right? I mean, you talk about South Africa. Go into as much detail as you can. And of course, I don't want you to give away stuff that you're giving away your paid subscribers. But I'm even hearing back from people from your Katusa Club that are saying it was unbelievable. It was great. Wish could have been there. Sorry about it. But talk a little about that because I haven't talked to you about that yet either. So everything that you're saying, I'm learning for the first time too. But I know you did briefly tell me really quick. Like it was an amazing trip.
The beauty of our markets is everybody is excited. Like you say, gold is going up, so everybody's feeling good. How you make money in this market is kind of like buying an incredible hotel after the fourth owner because they've built it, they've cleaned up the kinks of it, the operations. And mining is no different. Mining is a tough thing, and it changes because of the deposit. It's a very complicated industry, and so many variables. Something that happens in China in the trade wars can affect the price of gold or copper or whatever. So it's kind of a very dynamic industry, and I've been doing this long enough that my style, just like what I did in Altera or Northern Dynasty, I love going to assets that are advanced and have other people's money at much higher prices, advance it, and de-risk it for myself. This game's all about de-risking. Still has a lot of risk, Frank. Mining across the board. You could have a great operation. Look what happened in Bimini Canyon. And then boom, they have a wall collapse and the mine's not operating for almost a year. So many things can happen in mining, but it's all about de-risking it so your odds of making money are higher. This specific investment opportunity is a very contrarian bet. It's probably one of the best. I've been to hundreds and hundreds of operations. It's probably the best run facility I've seen. And you got to spend the time and walk through it and talk to the management, talk to the guys, talk to the truck drivers, the shovel operators in the lunchroom. You don't just hang out with the executives because you're always going to get a rosy view from the executives. Go into the lunchroom and be one of the guys who drive the trucks and talk with them and talk their language. And this is a big problem that a lot of suits and analysts, you got to have that street savviness. The Frank Curzio Bronx style of doing due diligence at the site, right? You also got to go through the balance sheet and all these things. But, Mike Tyson said it the best. Everyone has a plan until they get punched in the head. And everyone loves the concept and the thought of being a contrarian. But very, very few people can be a contrarian because, you don't just buy your stock on one day and it goes up. I use a tranche system. I finance these companies just like I did with Altera or Northern Dynasty, Copper Mountain, all these different deals, Equinox. And then, if you're looking for a stock that is a day trading, I am not your guy. There's other newsletters that promise 1,000% gains in 2 days or whatever bullshit they're selling. I'm a guy that becomes a major shareholder in the company. You can buy in at the same time and the same price as me. You get to sell before I do. And then this is usually, everything I do is anywhere between a 12 to 60 month play. Like Altera was almost 4 years, but that was a huge score. And remember when we went to Northern Dynasty, everybody was mocking us. And I said, guys, this is big. And initially you were even hesitant until you went to the site and you saw with David Lowell, like a legend, that the whole porphyry model, he really discovered. The textbook is his. And when you start doing the due diligence, you're like, hey, you know what? The share price is just a voting machine on the popularity at that time. And then within 12 months, not even, that stock was a 10-bagger. That's what I like doing, going when no one is talking about it, no analysts. And then when it's popular and all the investment bankers and big savvy Goldman Sachs and all the big funds out of New York are coming, that's when I get out for my subscribers. So I'm a true contrarian. I've been doing this for 7 years. I get into things that, I'm usually the first person to ever recommend one of these stocks, and I stick with it for a couple of years. Not everything works out, because anyone who says that all their stock picks are great is completely full of shit. I've had lots of, things that didn't work out, but you look at my track record, look at the people that I work with, and that speaks for itself.
Well, let's end with this, like we always do. Are there any names that have hit your radar? We've seen a lot of gold companies have moved up, and junior miners have moved up. They've seen 35, 40% gains. And like you said, if you're really selected with the right management teams that have done the right job during this down cycle, those are up, double, and you said you have a triple. Are there any names that you're currently looking at, even across uranium or anything? And, people love this, right? They love ideas, but you have given us ideas so far, different things. But I was just wondering, is there anything that's on your radar that you're looking at that's pretty attractive right here?
Well, the fundamental thing I'm writing about in my newsletter is we'll show mathematical proof now with what's going on with the global funds that you don't need to necessarily find a new gold stock. We're going to be in a market where things are still going to be very volatile, but any pullback in the price of gold or silver, we call it in our office, pullbacks are buyable. Whereas before it was like, oh shit, is this trend breaking down? You're going to, be on the sidelines. I think that the stocks that we've had incredible runs, like we're up over 60% on Pan American Silver. It's the second largest primary silver producer in the world. Would I tell you to buy it today? Well, no, because you're not in at the same price as me and we're up 60%. But it will pull back because every stock has its natural ebb and flow. Nothing moves in a straight line up. But the buybacks are viable. One that I'll give right now that I think is a screaming buy because it had a huge run to $9 and it's pulled back now to like 8 and change is Equinox Gold. I think that is a no-brainer. It's one of my largest gold bets in the market. I'm a top 10 shareholder in the deal. Hell, the company started in my office in Vancouver. Okay, I'm the one that introduced the story to Ross Beatty, and now it's his deal. I'm very intimately involved in the deal. I've put up personally millions and millions of dollars into the deal, and I think that specific stock proves my thesis that pullbacks are buyable. So that's kind of my answer to your question.
All right, bud. So listen, we covered gold, uranium, nice pick to Equinox Gold, but really great stuff, as always, Marin. And I want to say I really appreciate you coming on. I love doing the road trips with you. I always learn so much from you, but
and we've established I'm your number one backup podcast guy.
Which is a great thing, by the way, which is a great thing. But I love the fact, Marin, that, if anyone can take anything from this interview, it's going to the sites, going to see the projects, it's talking to the people and doing the homework. You boots on the ground, whatever you want to call it. You're not sitting behind your desk. Just go over that one more time, because I think a lot of people just sit back and they read things and they believe everything they read, because you brought up a good point on Northern Dynasty. When I went there, I thought it was a stock that I was going to short. And then I realized after talking to management that with all the environmental concerns, these guys are more environmental friendly than the people, the environmentalists. It was amazing.
Well,
so
more knowledgeable.
Just go over that one more time, how important that is. Because sometimes when you go and look at you do your own homework, it's amazing what you come up with. And that does lead to amazing, amazing returns sometimes.
But it's not just like, that's obviously part of it. But be aware of, like, Frank, it drives me nuts. The newsletter industry, how it's written. You have some tool that isn't writing his thing. He's standing there with a picture and he's got, yes, that's part of it. But when you got skin in the game, I can assure you, when you've put 5 or 10% of your portfolio into the stock after 3 years, your due diligence on this is going to hell of a lot be better than what I call journalist investing. Now, what do I call journalist or entertainment investing or newsletter? It's some dude that is marketed by a big company. He's not allowed to own the stock, but he's going to find the best stock for you for his 100 or 200 grand salary a year. And he's going to take a picture, and it's going to be written in this incredible copy that convinces you that this is the next biggest gold rush story ever. Be aware of that, because why the hell would you ever buy a stock from someone that doesn't have any skin in the game? Would you? And I always explain to me, that's my biggest pet peeve in this industry. So you got to go to the site and know what you're doing, and following people that know what they're doing, but also follow the guys who are putting their own, not just their reputation, but their own portfolio, and find out at what price and when are they investing. Just because a guy is investing in the stock and he's taking a picture and he does his due diligence, but if he's in at 10 cents and he's telling you to buy the stock at 50 cents or $1, that's bullshit.
Yeah.
Avoid, people like that. You're going to lose money. Now, when the guy comes and says, hey, I'm doing a private placement in this stock, I'm going to be the lead order and it's $1, and you get in at the same price, and here's my due diligence, and if you want it, great. If not, fine. And when it's time to sell, you get 3 business days first. That's someone you want to pay attention to. Now, it doesn't mean everything I do is going to work out to be a Northern Dynasty or an Altera or a big success like Ryan Gold, where my subscribers made 15 times their money in a year. But the odds, you've de-risked it, and the skin in the game. You look at Equinox, Ross Beatty, who's the largest investor in the deal, his cost base is the exact same as my subscribers. So our interests are aligned. We all invested at the same time. Now, when it ran to $9 and our subscribers are sitting at gains, you can trim some off the table or whatever. That's your choice. But a guy like Ross Beatty's not doing this for a 20 or 40 or 50 or 100% gain. This is his last major deal, and he's doing it for a 5 to 10 bagger, and he's going to pull it off because, there's something true about Pareto's law. Is it just coincidence that he's done it with Pan American, and he's done it with the Lumina group of companies, and he's done it with Altera? You remember that helicopter ride when I organized a site visit up to the Butte, when I became the second largest shareholder of Altera? Now, a guy like Ross, his daughter was getting married the next day. Do you remember that?
Yes, I do. Absolutely.
The time, the only thing that could fit in our schedule was that Friday. And we got the helicopter, we booted over, and when we were chatting with him on the helicopter, he looked at us and he said, guys, when you find something that is a game changer, what was that one line he said? Own as much of the own deal that you're going to run and make it work. And it was just the way he said it, and we both just looked at each other and were like, this is it. This is why he's the largest shareholder in every one of these deals. If you believe in what you're doing, bet big. That's the same thing Amir Adani does. He's the largest investor in his deals. Those are the guys you want to back. Now, I'm not the smartest guy in the industry, but I'm one of the more experienced and more successful in the game, and I know all the big players. But you kind of avoid what you said, well, how come all the juniors aren't doing it? Because most of them suck, and they shouldn't be in. If the public stock market didn't exist, I don't know if they'd be qualified to some of these management teams to even work at a car dealership, not as a salesman, but as like a guy who washes the car. They're useless, Avoid those guys. Stick to the really select few, find out what their cost base is, and then see, okay, well, what's the balance sheet like? It's not rocket science, but you got to control your emotion and your windows. And the problem with the investment world is, across the board, everyone's going to get excited when it's $2,000 gold or $3,000 gold. Well, that's when you want to sell, when everyone's excited. You want to start picking up the best royalties in uranium today when nobody is talking about it. That's when you want to do it. When executives running the uranium companies are depressed and they're getting divorced because the finances at home are so difficult and their companies are going bankrupt and they're changing into whatever the flavor of the day is, like a marijuana company. That's when you want to be in the sector, when there's true blood on the streets. It's a hard thing to do because in our world, that's not what sells newsletters, and unfortunately, the retail crowd gets sucked into this very promotional and well-written copy. But stick with the real players. And another thing I'd add, go to these conferences, like my conference in San Francisco. Go to the conference in Vancouver. The company that we run the conferences through is called Cambridge House. That is the best thing. It's free. I'm there for 2 days bringing the best guys. I bring Lucas Lundin, Ross Beatty, Rick Rule, Sean Rosen, Amir, Ivan Bebic, Nolan Watson, Marcel DeGroot, all these guys, Greg Smith. When we brought David Lowell and these legends, even Mr. Dines, such a smart man. Come to the conference. All you got to do is show up. 90% of it is show up, and you can see who's authentic. Like, I'm a nice guy, but I'll grill these guys hard on the board. And when they start bullshitting, like there was this one uranium panel I did when I asked one of the individuals who runs an exploration company in the Athabasca, whose deposit is underwater, and he started bullshitting about the situation. And I just cut him off. Like, fuck off. Answer my question. Don't disrespect me and the people in the audience with your bullshit, because I've been doing this too long and I know it too well for you to give me fluff. And you could see the authenticity. Now, people didn't, the comments online were like, oh, Marin's such an asshole, he doesn't let them talk. Why am I going to let them talk if they're spewing bullshit? No, not in my backyard, right? So that's how you can get yourself better, listening to a podcast like what you're doing. And really just doing a little bit of homework will help your portfolio immensely.
Well said, Ed. And buddy, we're going to leave it at that. I want to say thank you very much for coming on such short notice. Again, first call I made, and Marin said yes right away. And Marin said yes after coming back from that trip not too long ago, less than a week ago. And also, he's got a publishing date.
2 days ago.
2 days ago. And a publishing date that I know that you still have some more writing to do. So thank you very much, Marin. And of course, we'll definitely chat soon.
All right, buddy. Take care.
Great stuff from Marin. I mean, a lot of those predictions there, listen, whether you agree with it, whether you don't agree with it, he has the research to back it up. Okay. Again, we could be wrong, could be right, whatever it is. But I just love I love when people give predictions. Well, you're not really hearing too many people say, well, the dollar and gold are both going to move higher. That's a scary prediction. As you know, I've covered this with gold, and people say negative interest rates, that's the driver. It really wasn't the driver from 2012, 2016. I'm cherry picking, but it's when our interest rates were the lowest in history during that time period. So if that's such a driver, I was just curious how come gold went down 25% during that time, because it should have been a lot higher. So you're seeing more and more bonds, right? Negative yielding bonds, negative interest rates right now. Well, negative yielding. But what's going to push gold higher? And for me, the negative was if usually when we see the dollar, right, in relationship to the gold, it's inversely related. The dollar has been coming down a lot and gold prices have been surging 6-year highs. I think the dollar is going to go higher. There's a lot of evidence to support that. Maybe it doesn't, but even if it does, Marin thinks that even if the dollar goes higher, gold's going to move higher along with it. Let's see. That hasn't happened in the past, but let's see if it happens going forward in the future. And right now it's actually happened. The dollar is coming back a little bit and gold continues to move higher in this market. So I always say this podcast is about you, not about me. So let me know what you thought of that interview at frankcurzioresearch.com. That's frank at curzioresearch.com. And guys, next week, we're going to go back to our regular schedule, which includes not only an interview, but also educational segment. Again, just had to tailor a little differently because a lot going on with the hurricane. I definitely want to get something out to you, at least this week. So I could basically still say that I never missed a podcast for Wall Street Unplugged. I could still say that, at least for now. About how much I'm traveling, how sick I am, what's going on in my personal life. And now I could say I even got a podcast out to you with a Category 5 hurricane coming at my house, which, again, thank God it didn't hit. So I'm glad I'm able to keep the schedule and get a great podcast out to you guys with a great interview. So that's it for me. Thanks so much for listening. Thank you for all your concerns, emails past week in regards to Hurricane Dorian. And by the way, I want to thank two people here. One is Marin and the other is Garrett, who is taping this right now because I had no intentions on even – he's a studio. Garrett helps me tape this and does all the sound, the quality and everything. And I was just prepared to do something and send it to him. But just on short notice, guys, this is, these guys did me a big favor, which essentially did you guys a big favor today. So within a half an hour, we basically said, hey, we could tape this. Marin came on and we got this whole entire podcast all ready to go. But I can't take full credit for it. I got to thank Garrett and also Marin. So I really appreciate it. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.